In episode 50, we discussed blockchain, digital assets, and cryptocurrency, what they are, how they work, and what role they might play in your portfolio. Today, we take the conversation further with the co-chief investment officer of the Crypto Futura Fund, Jeremy Epstein. Now, in the spirit of full disclosure, one of your co-hosts has some client assets invested in this fund, and one of the principals of the fund also is a principal of the firm with which we affiliate, Arete Wealth. But this isn't a sales job. Jeremy helps us understand the nature and potential role of digital assets and cryptocurrency over the coming decades. He also evaluates some of the arguments both for and against, as well as some of the risks of owning cryptocurrencies. Stay tuned as we discuss all this and more right now on the Retirement Lifestyle Show.
Welcome to the Retirement Lifestyle Show. I'm your co-host, Roshan Loungani, here as always with Erik Olson and Adrian Nicholson. Today we've got a special guest with us. We're really looking forward to this today. We've got Jeremy Epstein here. He is the co-chief investment officer from Crypto Futura Fund. So we're going to have a great conversation about cryptos today. I think this is an important one for everyone listening because we are able to talk to someone who's been in the space really early on, and there's been so much really over the last few years talked about crypto. We're going to talk about the uses, the different assets that are out there, how you can look at it. So Jeremy, thank you for joining us.
Oh, thank you guys for having me.
So one thing that always stands out with me for you, Jeremy, is you have gotten into this space really early on, right? So tell us about that first purchase you made. What were you thinking? What were you seeing? What prompted you to do it? And when was it actually? Start us off.
Yeah, so early on is all relative, of course, because some of my friends beat me by a couple of years, so I'm like late to the game for them. But yeah, no, I first heard about Bitcoin in spring of 2013 on a blog that I was reading, and I sort of was like, all right, well, that sounds remotely interesting. So I went in, kicked it around, and usually I sort of say, okay, I'll put a little money into this, whatever it is. Technology. I've been a technologist most of my life. So I bought $1,000 worth of Bitcoin. And then, 4 months later, the price spiked up and I was like, all right, I'm out. So I sold out most of it because it was just seemed so ridiculous, held on to a little bit. And then I sort of put it away for about 2.5 years while I was pursuing some other activities. And then I sort of said, all right, I have these Bitcoin. What the heck are these things? And that began what we call the trip down the rabbit hole. And then I finally emerged and I just sort of was like, oh my God, this thing is a tsunami of disruption and basically no one sees it coming. And I've been in the space ever since.
And tell me about that actually. A tsunami of disruption. What disruption do you see cryptos doing?
Yeah, so the primary innovation that crypto technologies bring is this concept of a public distributed ledger, more commonly referred to as a blockchain. And what that does is it allows for the transaction of value between two counterparties without the need for any intermediary. And so by removing the intermediary with a mathematically guaranteed transfer of that value, you've significantly reduced time. You've eventually, yet not yet, let's be clear, you've significantly reduced cost and you've reduced the risk of having all that information in one central location, witness hacks or bank robberies once upon a time or anything like that. And so that streamlines a lot of the economic transactions in an economy, allows more value to move from party A to party to B, and basically says for anyone in any industry that serves an intermediary, they're basically eventually going to go out of business.
So are those all banks?
Yeah.
Yeah. So I can't now. I'm a fan of what we talked about before. I can't imagine a world without banks. I can't say I'm opposed to it because I don't know what it'd be like. But
to say that banks won't exist, maybe that was a little bit hyperbole.
Okay.
Banks as we currently know them will not exist.
Bullshit.
there might be a need for people to do financing or for groups to do financing. There might be people who want someone else to custody some of their assets. So in those concepts, however, the nature of the way those firms are architected and organized will be vastly different. You won't have, a small number of shareholders and a management organization. The entire institution will be owned and operated by its membership, by those people who actually conduct business with the bank. So that's a whole other conversation. But banks as we currently know it will be the equivalent of having like Wells Fargo stagecoaches going across the West transporting, money to San Francisco.
Yeah, that's an interesting concept you brought up. And it kind of leads into a question I've kind of been thinking about recently. So for like crypto investors, are there any like legislations, regulations, or any like high profile cases that they should kind of be like monitoring right now, just to see how this could like impact like the field, like any like current things like that crypto investors should be kind of like looking at right now that can really be a catalyst or could really like impact it in a way? Have you been seeing anything like that recently, or are they monitoring anything like that?
Yeah, it's a great question. I mean, certainly for investors in the US, this is front and center. And, for most of crypto's history, the regulatory infrastructure and guidelines have been extremely vague and gray. And it's made it very difficult for both investors and for the entrepreneurs in the space. We've had a little bit of clarity over the past few years. We've also had a few lawsuits against what were obviously no-gooders in the space, which is true of any space. Witness Danske Bank getting fined for $250 billion. So we got plenty of issues all the way around. For an investor who's thinking about this disruption over the course of a relatively long term, either the SEC and the FTC will create a crypto-friendly environment, relatively crypto-friendly environment, which allows for innovation to thrive, or they will make it very crypto unfriendly. And the real downside for that is, though people with investments in crypto will still prosper, the large majority of innovation and entrepreneurship and growth will happen outside of the United States, and we'll be handing away a competitive technological advantage for decades to come. And that's, a little bit outside of my scope.
Yeah, that's really interesting too. And it kind of leads me to another question I have about the adoption aspect of that. What are you kind of like seeing out there? Are you seeing it happen in certain pockets? Are you seeing it kind of across like globally, just certain like areas, like depending on their government system? Or so what are you kind of seeing that like going to the future on people like kind of accepting this new form of technology?
Fantastic question. I mean, one of the things that I think Americans of almost any age, but certainly sort of middle age and more senior level investors or age have, is that it's really, despite all the trials and tribulations that we have in our political environment, which are obviously plenty, as someone who lives in Washington, D.C. can tell you, but that notwithstanding, we have a relatively stable environment. Yes, we have moments of disruptions. But what it's important to remember as it relates to crypto is this is, by definition, a global 24/7 entirely open economic system that reaches to anywhere where there's an internet connection or, one of these basically. And so when you talk to people from countries like, Turkey, Argentina, Venezuela, Zimbabwe, Sudan, Brazil, so where places have seen rampant inflation. I mean, the Turkish lira has dropped, 50% of its value in like 6 months or something? I mean, something crazy like that. So if you are an individual in one of those and your entire life savings is centralized on one currency, like you are, pardon my French, screwed, right? Whereas if you say, look, how can I take advantage of the growth opportunities that crypto represents from a pure economic engine, while also having a hedge against inflation in some of them, Bitcoin being the prime example of that, I'd be an idiot not to, which is why, I've met people who literally started crying when they told me that Bitcoin saved their family in Venezuela and Bitcoin saved my family in Argentina. Like, it's hard for people in suburban Boston to imagine what it's like to have to get your paycheck, immediately convert it into cash, and then immediately go to the store to spend all your money on groceries that day, because you know that the next day or the next week you'll buy, a third or two-thirds as much of what you could afford today. I mean, yes, we have bad inflation, and sadly, I think it's going to be somewhat persistent for a whole nother year, but it's not hyperinflation, and hopefully we never get to that point, because that's just ugly.
Yeah, so that's the whole monetary argument for crypto and digital assets, generally speaking, seems to me to be, at least for right now, the most interesting. And I know that's partly because I'm not as sensitized, Jeremy, to all the other potential industrial applications that are coming down the pike. If listeners want, they can go back to listen to our episode 50, in which we talked about more of the backdrop to all of this, which was blockchain specifically and various industrial applications of the blockchain technology that have nothing to do with cryptocurrency. And so rather than delving into that same area today, and since we have the benefit of your expertise here, what I'd like to just have you kind of comment on is the role that crypto can play on this monetary level. You've talked about its role, particularly in the category of inflation, as an inflation hedge, but it seems to me that there are potentially other arguments for it as well. And one of those, I think that, at least from my clients, and I don't know that all clients are thinking in these terms, maybe I'm just paying more attention to the conversations with clients around this subject when they're centered on this. But their concern is which is closely tied to this inflation question, is the debasement of the currency through a level of indebtedness that potentially reaches a point of no return. And I'm not saying that they're doomsdayers, but I would certainly say they're alarmed by what seems to be the indifference among the political class to enormous levels of national debt, not only elsewhere, but certainly here in the United States. Your comments or thoughts about that?
Oh, Erik, man, I pity. Strap on, strap in, because you've triggered me now, man. This is near and dear. The first thing I will say to you is that the reason you're probably hearing this from your clients, of course, is, let's be honest, you're probably one of the greatest advisors on the planet. I think really that's what it comes down to, my friend. Just throwing that out from what I've heard. I read the reports. No, you bring up an incredibly important point. And, there's a joke I heard someone sort of saying right before Thanksgiving, like Thanksgiving's kind of a fun holiday in the crypto world, because that's when we get out of our cryptoverse and we meet up with our regular relatives, and they're all saying like, well, what does, what we call normies, right? What's this crypto thing? Like, what is this Bitcoin thing? Like every year at the family football game, I have the exact same crypto conversation with my cousin for the last 5 years. And finally this year, he said, you know what, this finally makes sense to me. And he started investing, which was interesting. Even though I've been talking about it for 5 years. So, but the joke is, what happens when your family comes to you at Thanksgiving or Christmas and says, can you explain Bitcoin to me? And your answer has to be, well, let's talk about the history of money. Because really, that's what this whole thing about. It's about money and value. Because what is money? Money is really just a magic trick that we all play on ourselves. That we believe this piece of paper or this digital transaction will have value for me in the future. Therefore, I'm willing to take this thing from you right now. But where does that value come from? Well, since August 15th, 1971, when Richard Nixon took us off the gold standard, its value is based on the full faith and credit of the United States government, right? So, okay, let's take that back. Well, where does that full faith and credit of the United States come from? Basically, it comes from the central bank, Federal Reserve. So Federal Reserve has the ability to basically control the money supply. Here's where it gets nasty. At any given moment, you have no idea how many dollars there are in circulation, which means you have no idea what your relative purchasing power of all dollars is. So number one, you have no way to find that out. Worse is that at any moment and consistently, the Federal Reserve can basically hit the print button on a computer and new money gets created. So if you want one stat that should make you stay up at night, sorry for your listeners, it's that since March 2020, 40% of all dollars in, 40% of all dollars in circulation have been created since March 2020. In the entire history of the US dollar, 40% have happened in the last 20 months. So you want to look around now, supply chain is a supply chain thing for sure, but you can't throw that kind of cash into an economy and not expect anything to happen, right? And so what happens is that at any moment, the central bank can deploy these funds. Now, that's the tyranny of centralization where there's one authority that has control. But wait, as they say, there's more. Because what happens over the course of history is that central banks, which are ostensibly independent, you've heard the independent Fed and what have you, over time, they become more and more influenced by the political entities. And what do politicians want? Politicians want to get reelected. So are politicians thinking about, well, how are my great-grandchildren going to be paying off this debt? No, I'm thinking about getting reelected in November, which means I need to fund the child tax credit. I need to create this entitlement, that, and not just for 1 year, but forever. Why? Because as we got a check back in the summer, and my wife was like, why are we getting a child tax credit?
Right.
We don't need the $300, thank God. And I said, well, she's like, it should go to people who really need it. And I said, yeah, but they only vote once, right? And so you need to, and that's what happens. So politicians, and if you look back at the history of, this is why every reserve currency throughout history has basically gone to zero over time. You just go back in terms of its purchasing power. Since 1913, the dollar has lost 99.8% of its purchasing power, okay? So politicians lean on the central bank to support funding like Build Better Back and whatever. And I'm not political thing here. That's money that has to be created out of thin air. And the 1.3 trillion and all the stuff that happened under Trump. So Trump and Biden get equal blame on this kind of thing. You know, they get leaned on. They print money that injects more money into the supply. Your purchasing power goes down, which we're all now seeing front and center. And basically over time, it becomes increasingly less and less, which is why there used to be a thing that you could buy for a penny back in the day. And now you'd be laughed at if you're like, what can I buy for a penny? Right? Those kind of things. So this is all about money. And what blockchain and Bitcoin do and other cryptos do is they say, let's take those people out of it. Let's not make this a political game. Let's just make this a mathematical thing where basically we say, we know exactly how many Bitcoin there are. There will never be more than 21 million. And that gets into all the technology, which means if you have one Bitcoin, you will always, until the end of time, have 21 millionth of the purchasing power of that particular currency. And that will never change. One Bitcoin equals one Bitcoin. So that, and nothing, no politician, no central banker can alter that, which means your purchasing power and your value is maintained, if not increased, over time. I told you triggered me, Eric. It's your fault, buddy.
Well, I'm glad. No, that's really good. So I have more questions, but I also want to make way for Roshan or Adrian, who may want some
I just had one comment on this with just the, I mean, you mentioned you bought your first Bitcoin like 2013. Is that correct? So since 2013, as you obviously know, there's just been a lot of new cryptocurrencies. They're practically coming out like overnight right now. So I think our listeners might find interesting with all these like cryptocurrencies that have just been coming out. Like, are there more similarities than differences? Like, what are some like features you can kind of maybe look at that can really distinguish maybe a good cryptocurrency from one that's, you know, some of them can be classified sometimes as like a joke or like a meme why they make them. Like, are there any like kind of the similarity difference aspects and like the different features that kind of really make some stand out more than others? I think could be an interesting area that if you can comment on.
Yeah, sure. I mean, of course, this is why Crypto Futura Fund exists, but we'll talk about that some other time. So what's really fascinating about this is like each of these, and I think what's important to say, there's cryptocurrencies, but that's within a larger asset class of crypto assets. Because now you've probably heard about NFTs, you've heard about, crypto utility. I mean, there are all types of collectibles, gaming, all these things are part of the crypto asset class. So currencies as a form of money is just one of those slices. So assuming we're talking about crypto assets all up, but if you want to talk about why one money is worth more than the other from a cryptocurrency perspective, that's also a very valid conversation. So there are a couple things that are interesting about it. Number one is each of these currencies basically represents an experiment, right? Because if money is a belief system, it's an opportunity, and basically it's which belief system will gain the most traction. And this is what's so ironic about the US is we talk about how we're committed to free markets and we want free markets and things, but we don't free market in money. You can't choose which money you use to pay your taxes in, right? Why not? Like right to choose, all that pro-choice, all that kind of stuff, right? So what crypto does is say, look, we're going to try thousands of different experiments to figure what monetary system is going to be the most successful in terms of generating the belief among its users and among a increasing number of people that this will have value. So in Bitcoin's case, there's a concept within the space called token economics, right? What are the economics of the system within it? So Bitcoin says, look, we're only going to ever have 21 million. There's a hard cap on this, where every 10 minutes, the computer that generates the Bitcoin is going to be rewarded or awarded 6.25 Bitcoin plus transaction fees. That's the economic model for the network. And people have to decide, okay, is that work for me? Whereas another one might say, look, we're going to have a billion tokens start off. We're going to have a 3% inflation rate in order to stimulate growth, but that inflation rate is going to be fixed unless 72% of our citizens basically vote to increase or decrease the inflation rate. Another one might say, well, we have 1 million today and we're going to put out 100,000 and we're going to see. So you can basically design any type of monetary experiment you want. So by definition, it's like, I mean, it's a terrible sort of metaphor, like let 1,000 flowers bloom, because I'm aware of the historical reference, but basically trying a bunch of things out there to see which one works, as opposed to saying, you must use this economic system, which we are the only people who control, and we can do whatever we want in order to achieve our short-term political gains. Alternatively, we can say, look, pick and choose the one you want. You can look at it. Which one has the most belief? Which one has the best technology? Which one has the best, fiscal economic system? Which one has the best governance system? Which one has the best use? Which one's accepted in, which countries, or not countries, which groups of people? Which game can I play this with? Or how do I, how much can I loan this out for and use this as collateral? Like, what's its resale value? A Mickey Mantle card is better than some Joe Schmo card. Like, okay, those are currencies. Baseball cards are a currency in that way, right? So basically, what I think that ultimately does is it will really be market dynamics for economic systems, where we have economic systems all around the world and all kinds of things. And now what we'll have over the course of, this is not going to happen by the end of next week, but it will give us the opportunity to different industries, different scenarios, use cases, whatever, for the best solution for that particular economic model, whether it's like a community of churchgoers or everybody who, lives in like Miami, like they have Miami coin now, so they could have all these things, and it will allow the best one to win in as pure way as possible, because everything can be verified and audited directly through mathematical proof as represented by the blockchain technology, which doesn't require, and as we said, somebody to verify, yes, this 2 + 2 = 4. 2 + 2 = 4, we all know that kind of thing. I should drink less coffee, I think.
Follow up on what you said earlier. And well, what you just touched on, what you said earlier about it being verifiable. I've heard and seen online multiple stories of people's coin getting stolen and they'll never get it back and so on. Can you just give us a little bit of information on that? And then what do you do
so
to protect
those are
yourself?
sort of two separate things. The fact that everything can be verified is basically what the ledger, because a blockchain at its super core concept is a database. It's a simple spreadsheet that says, Adrian owns this, Erik owns this, Roshan owns this, except for your numbers and not names. You have this. This is your asset, your balance. Okay. And everyone knows account 1, 2, 3, 4, 5 has 2 Bitcoin in it, or 15 ETH, or whatever it is. Okay. Now, what's different, one of the things that's different about this public blockchain, public ledger technology is the way that assets are moved. Instead of you doing a wire transfer and calling up the bank, and if you've ever done that, it's a painful process and it's expensive and it takes time, coming back to an earlier point, you have to call someone and say, hey, move money X from my account to this account, do all this stuff. That's how, and you have to go through this entire verification process, your name, your address. You guys have all done it, right? Okay. But in blockchain, it works differently. Basically, you say, I have a key to that vault that represents my whole account 1, 2, 3, 4, 5. I'm the only person on the planet with that key. Whoever has the key is the owner of the vault. So if you come in, point a gun at my head and take the key from me, you are now the owner of the vault. So this brings up the risk question. So on the one hand, this is fantastic because coming back to our earlier point about countries where people feel oppressed by their government, the ability to take their life savings with them to another country, plug into the internet and have it is incredibly valuable. So, refugees, dissidents, security and safety, protect all those things. So I don't want that to get lost. But as Spider-Man says, with great power comes great responsibility. So the responsibility is you need to make sure you know where your private key is and how to back it up and what to do. Now, there are plenty of people and there are scenarios where you say, well, that feels like a lot of responsibility. Like, I would love to have somebody who I trust. Okay, so then you say, great, I'm going to give my keys to somebody else because I think they have a Fort Knox installation in their house and you can't get the key from that guy's house, but you can just waltz right into my office and get it. Okay, that's great. But from the blockchain perspective, the blockchain doesn't care what the nature of your relationship is with that person. The blockchain just says who has the key. Whoever has, not your keys, not your crypto. So if that person has the keys, that is now the owner. So that's the custodian risk associated with blockchain, but it resolves your personal risk. So if you intimately trust that institution, which comes back to our conversation about the roles of banks in the future, if you intimately trust that institution, or you say, Jeremy, I really trust you, hold on to my key for me, fine, that's okay. But you have to recognize if I'm like, Erik, I'm going to just take your keys and sail off into the sunset and disappear and they're mine, like literally there's nothing you can do about it. So they're positive, like any type of but now in this scenario, and this comes back to the question about Americans not appreciating. Imagine that you were to log on to your bank or go to the website and it says, access denied. Or if you were to call, it's like, I'm sorry, Mr. Olson, your funds have been frozen by the IRS. What are you going to do? You can't, your money, it's not your money anymore. It never was because it was the banks because they have control over it. So, I want people to say, yes, are there risks? And so what happens when people lose their coins or lose access to the coins, because the coins don't get lost, they're still on the spreadsheet. What happens is if I lose my key, I have a boating accident and I drop my key into the bottom of the ocean, I'm not getting into that vault. And so if somebody, God forbid, dies or whatever, and there's not a plan for where are my keys so that you can access that vault, then you'll have these scenarios where people lose their coins or they throw away the hard drive or what have you. And that is, there's an entire industry emerging around just that scenario right now, like crypto inheritance, if you want to call it.
It's interesting. I had a prospective client who started off with a $100,000 nut in cryptos, and he purchased at the right time and it became quite expansive. And so he was looking for a custodian for that and looking for a trust company for that, because he and also incidentally looking for an estate planning attorney who was sufficiently acquainted with the transmission of crypto assets from one generation to the next to solve precisely the problems that you were just describing, Jeremy. So I think that it is interesting to see the kind of emergence gradually of both the knowledge necessary and then the institutional framework that accompanies it to support the long-term transmissibility.
Yeah, the good thing
of these assets.
You're totally right, and those are the crypto accounting, crypto estate lawyers, all that stuff's happening for sure. I think the custodian market will, and for example, in our fund, we have a custodian because I don't want to walk around with all my investors' keys. That's ridiculous. But we have something what's called a multi-sig, which is short for multi-signature. So no money can be moved, no coins can be moved out of the account unless my partner and I both digitally verify it through an entire series of biometric proofs, basically signing with we took the key and we split it in half. So if you don't put the two keys together, you can't actually open the door is essentially what happens. So those types of scenarios. So you might have a thing where you and your spouse both have access, and that person, if you don't trust your spouse, I guess, or your estate lawyer has the other half so that your spouse can get it or whatever, something like that. So, that's all happening.
Mm-hmm.
Now I lost my train of thought because I was totally on a roll there. But yeah, sorry, man. Bring it. Maybe I'll come
Well, I've
back.
got another question.
I'm old.
If you want
I'm old. That's what's
Hold
happening
on.
right now.
Eric, let me jump in. Let me jump in first because
Sure.
Jeremy, the other half of the question I had earlier, you explained the ledger, but I recently heard a story from someone else. I didn't speak to the source, but they talked about their phone essentially getting hacked and their crypto taken from their phone. So my question to you is, if you've got all the ledger out there, how come when something like that happens, you hear about it and the coins are gone as opposed to retrieving it? So that's the first half, and the second half is, well, what do you do about it? You mentioned the custodian or the dual signature, but
So in
what
the
if one
scenario, I just
signature
want to
stole
point,
it?
like the coins weren't stolen from the phone. The keys were. So remember, whoever, not
Okay.
your keys, not your crypto. So if I hack your phone and your key is digital key
Okay.
is sitting on your phone, and that's the only place it is, and you have no protection around, and I walk into your phone, grab the key and leave, then the coins are still on the ledger. They still belong to
Yeah.
account 1, 2, 3, 4, 5. The possessor of the key has changed, which means effectively the owner has changed, but the ledger doesn't care. The ledger says, does this key match to this lock? Okay, you can open this door. Does it not match? You can't open a door. It's as simple as that.
Unlocked. So if if the key is stolen, is there a way to get it back?
Aside from figure out who stole your key, like, I mean, I don't want to say never,
No.
and
Okay.
I'm
So no.
sure,
So then
I know that there have been allegations that because every transaction is tracked, like if I were to steal your key, remove your coins from your account and put it into my account, and then subsequently move those same coins, because every coin is like effectively tagged to this account, and somehow that the person who received that, or the company analyzing all the ledger transactions, could say, wait a second, that guy took stolen coins from his account and paid it to this person, but that's also Erik, who bought his tickets to the Cubs game last week from the same vault, which means Erik owns the key to that vault where the stolen coins were. Erik, can you explain how those coins got in there? So yes, it's possible. It's just like Erik would have to be to the point where he's like, I'm using that vault, and he'd have to have an effective like money laundering operation, which again, like any operation, exists, but it's because it's all tracked digitally, immutably on the blockchain. It just is a lot more complicated than moving cash across a border.
And
Yeah,
then how
great
do you
question.
protect
So,
yourself
this
from
is
something
definitely an
like
area
that?
of concern for, some of the people I know who've been in the space a long time and have a fair number of holdings. Is you just have to be really smart about your like backup protocols and protection protocols. And, there are people who'll say, I don't ever, my keys are all in a safe, or more importantly, they're safe in another country, or they're in a safe with, I've split them in half and I put one in this country and one with that person. And so there is thought and preparation. Like, you don't just want to sit like with your keys on a Post-it note on your keyboard. Like, that's just not like on your monitor. That, like, I might steal your password, but it's a heck of a lot worse if I steal your private key. So like, you just want to think about, okay, let's say, my house burns down. Okay, well, what happens then? Well, then I should decentralize. And remember, that's the lesson of this technology, is you can decentralize technology, you can decentralize processes and systems, and that reduce risk. So by having your private keys on your desk, high risk. In your house, lower, but still high risk. Splitting it and sending one to you, Erik, and one to my cousin in England and whatever, a lot less risk. And so you just want to think about those things. But to our earlier point is, if I get hit by a truck, I would want to be able to figure out how to put all that back together so that my siblings or my descendants and whatever, not just I, but if anybody feels that way. So it requires a lot of planning, but planning, I should say, but it helps you think a little bit more strategically at the same time, which comes back to the whole point of decentralization, which is what this whole thing's about. It's like the risks of having all power and information in one location is just high across the board, almost however you look at it.
So Jeremy, you monitor a lot of these assets as they're emerging. I was fascinated by your discussion of what sort of thing you want to invent. For example, the 3% increase to accommodate growth. I thought that's an interesting innovation. Was that just you conceptualizing something on the fly, or is that actually one such digital currency or cryptocurrency?
I mean, I wasn't thinking of one in particular, but like, those are the types. I mean, the business model opportunities, once you remove the intermediary, your cost structures drop by orders of magnitude. I'll give you the best example out there that I know of. 30% of the premiums that you pay for your insurance just go to overhead, keeping the lights on, paying for the infrastructure, coffee when people are in the office, I suppose, that kind of stuff. In a decentralized insurance model, the entire process for managing risk, assessing claims, all payouts is happened digitally native. So you now have you've taken like 99% of those costs out, right? Okay, well, what does that mean? It means there's going to be once you lower the cost, you've lowered the barrier to entry for innovation. So now there'll be entirely different new business models. The one I came up with the other day, for example, is that my dad and I were complaining, and maybe you guys have this problem of like, the number of robocalls we seem to be getting has been increasing significantly, and it's driving me bonkers, right? But imagine this. Let's say that why does the robocaller get to call you for free and steal your time? That's what happens right now. But imagine a scenario where you had a digital guardian that said, you'd like to talk to Mr. Olson? You will need to send him $100 worth of value right now just to have him pick up the phone. And then you need to pay him $1 for every minute he listens to you. Okay, well, at that point, and in a traditional fiat world, you can't do that. It's it doesn't work. But in a digital blockchain world, you could easily do something like that. You set your price. To talk to me might be $50, but you guys are so valuable to be $10,000. Fantastic. And then only someone who's willing to pay you 10 grand, and you're like, well, this guy's serious because he just paid 10 grand to talk to me. What do you want? And then it goes, but that values your time. All that's possible in what we call a crypto economic business model that sits on top of one of these token economics. This, again, is going to play out over years the same way we saw the .com play out over years. We had the big boom, everything fell apart. Just because the internet was overhyped didn't mean it was here to stay, right? And what we've seen in the last 20 years are internet native business models that were previously impossible. And that's the big shift that's going on here. It's not how do we use this technology to do what we already do, like email is faster mail, e-commerce faster is commerce. Great, good for you. And yes, you should do that. VoIP is better phone. Yes, yes, yes. But what's really powerful is the things that were previously impossible. Google, Facebook, Netflix, all of those entities, DoorDash, they all could not have existed without the internet. Similarly, there will be entirely new business models, I believe, in our thesis, that are built upon the new capabilities of intermediary-free value transfers globally 24/7 with anyone being able to access this whatsoever. That's a game changer. And I think that that's going to create an absolute torrential downpour of value for people and communities around the world, but part of that is a lot of them are going to fail, but it doesn't matter. The ones that win are going to be ginormous, but community owned, not just owned by Mark Zuckerberg.
Mm-hmm. I've got more questions, but guys, I don't want to be the only one asking. And
I'm ranting here, guys. Thank you.
No, this is great.
I don't know if this is valuable,
Jeremy,
but I'll talk about this all day. Okay, great.
Yes,
great.
It is.
It is. You bring up something interesting, and it wasn't directly with what you'd said, but about how something's going to win. There are now over 10,000 cryptos, right? So if you're someone getting into this space, what should you look for to try to find what's going to win?
Yeah, wow. So, excuse me, great question. I think there are a lot of angles. I mean, and part of what we've done at our fund is basically try to answer that question through our algorithm of finding these, diamonds out in the mine. That's what we do. So there's a lot of work that's gone into that, but like on one foot, I'd say you want to look for things like adoption, not just adoption in terms of holders, but you can look at that. Remember, on the blockchain, you can see how many different addresses have one Bitcoin in them, for example. So for example, I just saw a stat the other day that said 5.1% of all Bitcoin is now held by people with less than one Bitcoin. So, okay, more people have more, or 95% is sure, but and a few years ago, that wasn't the case. So now you're seeing adoption there of smaller, probably retail buyers. Fantastic. That's a good sign of growth. Another one might be how many applications are being built to make this blockchain sort of functional value. It's one thing to throw out the internet and, HTTP and SMTP and all that stuff. It's another thing to build Chrome. It's another thing to build Gmail or Outlook or whatever. Those are all applications that make the internet work. Similarly, the blockchain and that layer is really like the internet that most of us don't even think about. This actually comes back to what we were talking about before in terms of the difficulty around custodying. Like, I think that entire process, this is like, if you guys remember, I mean, Adrian might be a little on the young side, but the rest of us have gray hair, so good for you, buddy. Back in the 80s, we had dial-up modems, right? And you put your modem, I'd put it on the thing, my mom would pick up the phone and somewhere else in the house and knock me offline. I'd be like, Mom, I'm bulletin board. Okay, getting online through a dial-up a 300 baud dial-up modem in 1987 was complicated. It was hard. Most people didn't do it. 10 years later, or 12 years later, or today, it's invisible. It's everywhere. I mean, there are probably like 31 devices in my house, right? Or more because of my kids. So, like, I think I don't want to say 100%, but the significant odds are we'll see that same type of UX, user experience simplification, as we evolve, because that's just invariably, you can't get that next layer of person to come into the ecosystem unless it's like meets their threshold, and everyone's got a different threshold. My tolerance for the technology is higher than most, but I also assume much more risk as a result of it. So I have plenty of losses. I've had my stuff hacked. I have the battle scars to prove it, but that's part of being on the frontier. As we move in, more and more people are going to say, well, I don't want to deal with that. And you shouldn't have to deal with that, but the consequences is you don't get as much of the upside because a lot of the early adopters have already come in. So, there's a trade-off. It's a little bit more safe, but you don't have as much upside. That's not to say you're totally the last guy on the train, but everyone has their own tolerance, and that's fine. I don't care.
So, Jeremy, it's interesting, the applications of the technologies you've talked about and the long period of time over which we can anticipate that there will be new innovations brought into the marketplace and tested in the marketplace and then eventually becoming dominant. I think that seems completely plausible. Interestingly, though, I watched some of the blockchain ETFs, and I've been a little surprised, honestly, that there hasn't been more progress, I guess I might say, in the underlying holdings of those ETFs, such that the market capitalization of those, at least the innovations that do exist, are driving those blockchain ETFs higher. I mean, they've been fairly prosaic, I would say. So if that's a proxy, and maybe it's not a good proxy for monitoring what's taking place in the broader industry of the application of blockchain, then it doesn't seem like, at least so far, there has been anything really that breakthrough driving those investments higher. Am I mistaken in my perception of that, or is it I'm just looking at the wrong ETFs, or what could account for that?
It could be both of those,
right? Okay, yeah. Possibly.
A couple things. Sorry to be snarky on that one, but.
No, that is totally fine. We love snarky guests.
Okay,
actually,
I'll amp up the snarkometer.
It's great entertainment.
If I have to. So the first thing on the ETFs is, if you think about the ETFs are re-injecting traditional banking or financial models on top of crypto. It's basically saying, I'm going to give my money to a custodian. They're going to go buy the coins for me. Well, they're going to mark it up. Mm-hmm. So it's much more effective to work with a specialized fund person or to go direct, because you're going to get much better access. You're not paying this like 40 this significant premium just to have the benefit of having this ETF that shows up nicely in your account. That's great, but you're paying for that, right? So that's number one. The second thing is, like, one example is there's an entire emerging field of what's called play to earn gaming. So I don't know if you guys are big gamers or not. I'm not, but basically in the gaming world, if you think about the way that games are structured now, just like Facebook and all these, they are centralized economies. There are people who spend a ton of money on Fortnite, whatever the currency is called in Fortnite. I can't remember. Speaking of tens of thousands of currencies, every game has...
they call them in-game purchases.
Right. But there's a term for the currency in Fortnite. No, I can't remember what it's called. But like...
Yeah,
like, oh, the skins. I guess I was talking about the skins. That's not the currency, but that's one of the things that you buy. But like, Call of Duty, all of these games have a currency for people to transact with each other. However, what's that?
Jeremy, I've got a 9-year-old. They're called V-Bucks.
V-Bucks, perfect. Okay. So you're saying to me there are a lot of cryptocurrencies, and I'm saying to you there are a lot more currencies already than you realize. Right? V-Bucks already exist, and your 9-year-old is happily willing to trade dollars for V-Bucks, probably more than you would like. Okay, so those
definitely.
But here's the problem with the V-Bucks. The problem with the V-Bucks is what happens when he wants to get the V-Bucks back out, or what happens if he wants to take V-Bucks from game A to game B and say, oh, you know what, I'm tired of playing this. He can't do either of them. And what about the fact that by him playing with the whatever game it is, Fortnite or Minecraft, whatever, he's actually contributing his time and value to making the game better for everybody else. Isn't that worth something? So in a current model, the centralized game companies or game studios have no incentive to do that because they have these captive audiences, captive economies. They can set the exchange rate. They can also create an entirely new amount of currency, just like the Federal Reserve can, and no one would be able to verify that it was the same amount or more, what have you. However, in the blockchain world, there's this concept called play to earn, which means, and Axie Infinity is sort of the prime example of this one. They basically have 3 million people in the Philippines, among other people worldwide, who get paid for the entire time they spend playing and doing actions in the game. And they earn that. Now, they don't earn a ton, but a lot of people, like multiple people, millions of people in the Philippines, take that money. Then they can take it out of the ecosystem, trade it for whatever the pesos, and go out and buy whatever they need. But they're getting paid and compensated just the same way you get paid for taking the phone call. That's a transfer of value. By building something in Minecraft or creating a building in SimCity, I'm creating value for everybody else. I deserve to be compensated for that. So now that happens, and then I need more currency because I want to buy a skin and I want to do this and I want to upgrade my car or my gun or whatever. Fine, okay. But then when I'm done with the gun, I can go put it on a marketplace, sell it out for Bitcoin or ETH or whatever, and I'm off and running. So like that's a business model for gaming, which is, by the way, like a multi-gajillion-dollar industry. Yeah. That simply can't exist today. Mm-hmm. And that's happening right now.
Well, all right. So that's a great response to my question. And so I guess I just need to widen the scope of my understanding of all of this. So Jeremy, in terms of ways in which investors can approach this, first of all, I want to talk with this sort of the principle of simplification of the investment process, because not very many people have the bandwidth, myself included, to go survey literally thousands and thousands of possible candidates for investment or adoption as an investment vehicle. And so your fund, I just want to highlight the Crypto Futura Fund is something that you, as Roshan already indicated earlier in this podcast, you are the co-chief investment officer, if I understand that correctly, correct?
That is correct.
And so you're offering a way for people to simplify on that level, and just instead of having to become masterful in all these domains, they would just rely on your mastery. So I just want to highlight for people that if they have an interest to explore this with you, how would they? And this isn't wrapping up the show, but I just want to take a moment to point people to you if they wanted to learn more about this. How would they get in touch with you? How would they learn?
This is like the commercial break before the big grand finale, right?
No, it's because I think that we have an audience that might be very interested in pursuing this somewhat
Yeah,
further.
I mean,
So yeah.
look, we have a website, cryptofuturafund.com. So hopefully it's just the way it sounds. It's spelled the way it sounds. Contact form right there. You can obviously send me an email, jeremy@cryptofuturafund.com, and happy to talk then. But yeah, I mean, look, at the end of the day, the reason I started this fund is, I wanted to give. I know this is complicated. I mean, I spend, as you could tell, a fair amount of time studying this, and I'm still confused most days. Okay, and it's the pace of innovation is mind blowing. I saw a great tweet the other day that said, being in crypto is like both being on the cutting edge and feeling like you can never catch up at the same time. Like that's kind of what it feels like. So you just have to learn to accept the fact that there's no way you can follow what's going on. So yeah, I mean, we started this fund because we said, look, we know this is complicated and it's challenging, but what you don't need to worry about is how it works. Yes, I can talk to you all day about SHA 256 hashing algorithms and Byzantine fault tolerance. We could do that. I'm happy to have that conversation and nerd out. But the important thing to take away from this, in my opinion, is not how it works. It's that it works. Just like we talked about the internet. It's working for more and more people. And you don't have to take it from me. You can go look at the blockchain yourself and see what the numbers are. That's trust but verify. Trust me, but go verify for yourself. DYOR, do your own research. But that's fine. But we started this because we said, look, we know it's complicated, but as my friend likes to say, your doubt is my alpha. So while everyone else, like Charlie Munger and all those people are saying Jamie Dimon are dismissing it, fine, be my guest. We'll make, alpha, hopefully, on the way between here and there. And what I say to people is, if you're looking at the price every day, you have the wrong mentality. And if you're looking at it every month, you have the wrong mentality. But if you're looking at it in years and decades, you're going to see a very consistent story of up and to the right. And it's just getting started because the numbers are like minuscule, but the growth rates are absurd. And so it doesn't take long for that slope to go up really, really fast. And that's the bet we're making. And so we said, look, there's a ton of opportunity out there. We realize it's complicated. It's hard to make sense of it. We're going to put forth our best faith effort to help people figure out how to separate the proverbial wheat from the chaff. Will we be right? I don't know. Will we do our best to try that we are? You bet. And that's what we've done. So that's basically what the fund's all about.
So, and also if people because obviously you're a very stimulating mind as well as a personality. So if people wanted to follow you and kind of keep up with what you're contributing out in the world intellectually, how would they go about doing that?
Oh, thank you. You're very kind, Erik. You can be my publicist any day, man. So, I mean, basically the two things is I spend Twitter's like a big outlet for me, JER979 on Twitter. And then I also blog 5 days a week. Call at blog.neverstopmarketing.com. Never Stop Marketing was a company, a consulting firm I started about a decade ago. I'm the founder, but I'm no longer the owner, but I still have maintained the blog. And I blog 5 days a week. I'd say 70% of the content is around crypto. And then the other 30% is about whatever I feel like talking about that particular day.
Oh, that's great. So blog.neverstopmarketing.com, and they can find you there.
So I've been doing that every day for 6-7 years now or so. So there's a lot of content. JER979 on Twitter.
979. Okay, fantastic.
Awesome, thank you.
So I have another question, but Adrian, I don't want to, if you've got a question that you want to jump in with as well, have at it.
I don't right now. I think
gentlemen,
we've got some really good content in this area, though. So you can go ahead, Erik.
All right. So here's another. So I was at a conference recently, Jeremy, and as it happened, to my surprise, honestly, there was a conversation about crypto or a session, a breakout session on crypto. And so I thought, okay, I need to pay attention to this, and I need to be learning and helping my clients get a better handle on this as well. So the argument that all of the presenters in this particular one were making was driven by mostly, I would say, the libertarian argument that while there are many exciting potential roles that blockchain and cryptos can play, if your primary aim is to have something that is less susceptible to a policy intervention that would undermine your ability to use this as a means of exchanging value, there was one clear leader in this category, and that was not subject to some of the other vulnerabilities of these other currencies. Now, I probably don't. So I just want to throw that out there. Do you agree? Well, I haven't named that leader that they identified, but if you were to say assess that argument, would you say true, untrue? How would you evaluate that argument?
Yeah, so I heard sort of two things in your question. So the first was, what's the deal with the strong libertarian streak within the crypto world? And then the second thing is, if you really wanted to implement that libertarian sort of mindset, there would be one particular, I guess, currency that would be your preferred choice. So, I mean, I could take a stab at number two. I have no idea what they said, so I'd be interested if we're in alignment there.
But sure.
I'll save that for the end, because I think the larger point comes around, why is there such a strong libertarian bent in crypto, and does that mean we're going to ultimately live in a libertarian utopia as opposed to just your own utopia? So there's no doubt there's a big libertarian streak within the crypto community for all the reasons that you've outlined. Like, that makes a lot of sense. I mean, for people who, and you don't even have to be sort of a pure libertarian, but if you're sort of a technologist or a technophile,
right,
like, it doesn't take a lot to sort of see what's happening when it comes to digital surveillance. Like, if you want a sneak peek of the future, like, go look at China, right? So,
right.
I mean, AI recognition, I mean, they have a thing where if you jaywalk, there's camera visual recognitions, and it will automatically A, send you a ticket, B, tweet it out, and C, tell your boss that you were jaywalking, right? So
it is.
Wow.
I've spent some time in China. It is alarming.
It's alarming,
the
and
extent of the surveillance state.
It's a total surveillance state, and so that to me is one of the great concerns around this movement towards what are called central bank digital currencies, where imagine that all this power that we talked about with the central bank now has the digital technology associated, so that literally the bank knows every single transaction you make, to whom, when, where, can shut you down, can do all kinds of stuff at any moment. Well, that's like a financial surveillance tool of proportions that we've never seen. So while we say, oh, that would never happen, whatever, like that doesn't make me comfortable. It doesn't make me comfortable as an American. It doesn't make me comfortable as someone who studied history. It just...
Oh, let me just interrupt you there. I mean, just so that it doesn't sound so fanciful, we had a proposal not more than a few months ago to monitor every single transaction in every single American's bank account that was at least $600 in size.
There you go. So this is not reality, but imagine taking it down to like everything, not even the banks. Like, if I just give you $1,000 of cash because I wanted to pay back for the football tickets or whatever, we're going to Super Bowl, like, the bank would know about that too, right? So to me, based on what I understand about technology and how that information could be used by one, absolute power corrupts absolutely kind of thing, like, that just makes me really nervous. So I think it's not that I came with this as a libertarian bent. I've probably developed more libertarian sensitivity since I started to understand this world and the dangers of centralized digital information at scale. So yes, but at the same time, what's so interesting is that there are people on the other side of the spectrum who really are like, this makes a lot of sense. One, if you are sending money back, if you're an immigrant to this country or Europe and you're sending money to your home country, today you're paying like Western Union obscene fees to do so. Well, why would the person who can least afford it have to pay like 16% transaction fees to send money to El Salvador? With crypto, basically that can go to zero. So, and if you're upset at the way that the large banks basically manufactured the mortgage crisis and got off with basically no problems, in fact, bonuses, and you don't like the fact that banks abuse their power as the people who get to basically get the fresh money first, you're getting 0.02% in your account, but that's because they're getting money for free or whatever. It's just like, it's offensive on both sides. So you can actually look at this and say, look, the technology itself is neutral. Any technology is neutral. It's not inherently good or bad. But what it can do is it can take It won't make things perfect. Back in my youth, when I saw the internet, I was like, this will be like a utopia. Okay, wrong. This time around, I'm like, all right, there are going to be new problems. There are always problems. But I think it will be a significant march forward in terms of technological or sort of general levels of welfare. And this can go to things like imagine distributing, welfare to people who actually need it. The money goes to them. It doesn't get siphoned off by a nonprofit in the middle. It doesn't get absorbed by some ineffective bureaucracy that has to pay 30%. The money goes directly to the people who need it right then. They have it. They know they have it. It's all done. And you can do all of that. And so there's a lot to be seen here to just, reduce costs, reduce friction, improve freedoms, provides better security and privacy guarantees. So to me, it's worth looking at. And oh, by the way, I'm not the only guy who's figured that out.
So you said the second part of my question you would reserve till the end.
Oh, well, my hope is that they said Zcash.
They did not.
Did they say Monero?
No, they said Bitcoin.
Oh,
which was they thought
they
the
said
least susceptible to government regulation and
I thought you meant surveillance and privacy. Got it. Yeah, no, Bitcoin to me at this point is a foregone conclusion. It's just a question of when.
Interesting.
It will be. It will. I personally. Okay, I'm not going to say this.
All right, good.
Yeah. I think the market cap of Bitcoin could one day equal or surpass the market cap of gold. Let's just put it that way.
Okay.
Which I think is like 10 trillion now.
Something. I think you're right. Well, listen, Jeremy, we've covered a lot of territory, and I could go on and on, but I also am mindful of the fact that we've crossed over the hour mark here. So, Roshan or Adrian, do you have any other questions that you want to pose to Jeremy?
I don't right now. What about you, Roshan?
No, Jeremy, thank you so much. I actually do have questions, but we'd be here another hour, so maybe we can do this again sometime.
It would be my honor, gentlemen. You guys ask great questions, and you really make me think, so I'm grateful for the opportunity.
Oh, well, you're very kind. So, Roshan, you want to close us up here?
Well, yeah, Jeremy, first, thank you. You had said this earlier. You can be found at the website is cryptofuturafund.com. cryptofuturafund.com. We'll include that in the show notes. And can you repeat your Twitter handle one more time for anyone that wants to follow you?
Sure. If you're on Twitter, it's JER and the numbers 979, JER 979.
Is that your Bitcoin key right there?
Yeah, I would hope
not. I don't even.
Just hide it in the open.
No comment. As my friend said, there are two rules of Bitcoin: always talk about Bitcoin, never talk about your Bitcoin.
Oh, there you go. well, Jeremy, thank you again. We will definitely include your information in the show notes for anyone that wants to follow up with you. We really appreciate your time. For all the listeners, I hope you found it as interesting as we did. This has been another episode of the Retirement Lifestyle Show. Please like, subscribe, give us 5 stars, tell your friends and family about us, and we'll be back next week. Thank you for listening.